Aidan Locke, President and CEO of Marimaca Copper. We are developing the Marimaca oxide deposit in northern Chile. We've just released the DFS, which we're very thankful confirms all of the things that we've been saying on your channel for the last couple of years, in that it's an industry-leading project. We're continuing to explore, and there's some exciting results coming out, and we are preparing ourselves for the next phase of development.
Fantastic. Look, DFS out, it's good news. Maybe run through the numbers first and we'll kind of get into it.
Well, look, I'd start by saying I'm not unhappy with it, but I think there's room for improvement. Certainly, we ran out of time, and in the end, we just decided to get it out in its form, knowing that it's a snapshot in time, and it's not what we're going to base the build on. There's still a lot of engineering work to get to the point where we actually press go. But what I'm pleased about is it confirms that we are in the bottom decile of capital intensity for copper projects, new development stage copper projects globally, according to the Wood Mac database. So we're sub $12,000 a tonne of copper equivalent production, which is a very nice place to be. The all-in sustaining cost right on the cusp of the first and second quartile, again, a very strong position to be in. And when you combine industry-leading CapEx with that very strong and competitive operating cost profile, the return on invested capital metrics are really good. So bit over $700 million of post-tax NPV8 at $4.30 a pound, with a 30+% IRR. If you take that up to the numbers that Mr. Friedland and the crew at Ivanhoe Electric are using, we are top of the pops. It's a $1 billion plus NPV with 40-odd% IRR. So it's a really nice project. We're very happy that it's done, but now it's on to the next set of objectives.
Okay, and look, you talk about maybe some of the improvements that can be made. I'm looking at 72% recovery life of mine, 78% initially. I assume more metallurgical work, etc., engineering work to be done. How much time and effort do you spend on that versus going and putting the financial stack together to build this thing?
Well, we have to do both. So in order to go from where we are today to ready to build, we're going to be doing detailed design and engineering. And during that detailed design and engineering phase, we will be focusing on value. So where have we over-designed? Where can we take costs out of our CapEx? And in our view, there's quite a few areas where we have over-designed things. Things have been designed for the high Andes, where the operating conditions, the weather conditions are significantly different to what we have down in the low Andes. And so we see a lot of opportunities to reduce that. Now, what often happens is when you go through that phase, there are things that go the other direction, go against you. So we're thinking of this as a very defendable pre-production capital cost. We would like to find some improvements, and we think we can. We will be running the debt financing process in parallel with that. And so neither of those work streams will fall behind each other.
Okay, and what about things like, I noticed that you kind of inferred as, they were excluded and treated as waste. What thoughts on drilling strategy and the timeline to convert that material into reserves?
We probably won't go to convert that material into reserves at this point, because none of it will fall in the first 5 years of the mine plan. And so really, is it good value for our shareholders for us to be upgrading that to get arguably to increase the NPV by $100 million? Probably not necessary at this stage. We've got a great project that is financeable. We've got a great growth project, which we think needs to be brought up the curve. And so we much prefer to spend our money on Pampa Medina oxides, and then, of course, on the Pampa Medina exploration drilling campaign.
Which we'll come on to. Just sticking with the FS. But in terms of the mine currently envisages like for 50,000 tonnes per annum copper cathode, is there kind of scalability built in here? And how's that work within the kind of constraints, regulations of the kind of Chilean mining code?
Yes, we've designed various bits of our infrastructure and various parts of the project to enable cost-effective future expansions. So that's all been built in. We will further develop that as we progress the Pampa Medina PEA and the detailed design and engineering to ensure that's the case. So yes, we're thinking about growth. We're making sure that what we're designing up front within reason includes the ability for us to expand. So things like water availability, power availability, footprint for the SXEW, all of that has already taken into account the potential for future expansions. In terms of our ability to do it within the regulatory confines, no, we would need to go through a permitting process, which is why I say, Pampa Medina is at least 3 years behind the mod, because it's just, we haven't done the technical work, but we also haven't gone through the permitting process. So it's at a different level of maturity.
But but the point is, let's get going, and we'll kind of do everything else in conjunction. Okay. You mentioned water there. Obviously, there are other things which will kind of affect cost and timing, etc. I mean, how are you seeing acid and power and sort of general mining costs?
Power is pretty stable in Chile. It's actually especially in the part of Chile where we are, where there's a lot of renewable solar in particular investment. The power price is actually relatively low and relatively stable. So we're looking at a direct power cost of between 7 and 8 cents a kilowatt hour. Once you add in the poles and wires and the regulatory costs, it's about 9 cents all in. So it's cheap. So no concerns on that side. The acid price exposure is a big, well, I won't say concern, but certainly one of the bigger risks to our business plan as we currently present it to our board and to our shareholders. The volatility in that underlying asset price has the potential not to sort of ruin us or put us out of business, but to really degrade our margins and degrade our cash flow generation. And so we've been focused a lot on our strategy around the acid side of the business. And you probably saw, I don't think we spoke, but we put an option out to acquire a used acid plant that will provide about 30 to 40%, depending on the phase of our base case acid. The reason we did that is our analysis of the sulfuric acid market versus the elemental sulfur market shows that in virtually all cases, you will have a net positive NPV relative to not installing that plant at a range of capital costs. What it really does is removes a lot of volatility from that underlying exposure to the asset price.
Absolutely. No, obviously, I'd love to try on. You're going through a diligence process yourself as an option at the moment. What are you looking for? There'll be some technical and logistical challenges in terms of relocating, restarting, etc. But is finance the number one issue, or what should we be looking at?
No, so we've done a review, and we went up and did a cursory review on site. So we sent our team up to site to review the asset. There was a detailed technical report completed by an expert engineering firm, which laid out all of the component parts. The next phase of diligence is just about tightening up our internal estimates. We did a rudimentary capital cost assessment to dismantle, relocate, and reassemble, and then commission that plant. When we presented it to the board, we ran it with 100% variability on the high side to those capital cost estimates, and it still works from an NPV perspective. So the next couple of months is about tightening that up, making sure we haven't missed anything that could really deviate us from that plan. But I'd say, there'd have to be a pretty nasty surprise in there for us not to exercise that option and then dismantle and send it up, and we'll store it up at our site. Then the next phase is to determine where the best location for that plant is. Is it up at the mine site, or is it down in Mejillones, which is a little bit more crowded? There are pros and cons to both. So we'll study that once we've exercised the option, and we'll work out where the most optimal solution is.
Right, and what does that look like in relation to buying something new, off the shelf or otherwise?
Brand new, you're looking at $40 to $50 million for 150,000 tonne sulfuric acid plant just for the plant, and then you're probably in the order of $20 million, 15 to 20 for erection and assembly. So 60 odd million once you're all in. So it's not ridiculously expensive relative to the price of the project, but when you start looking at the capital costs, the cash savings that you make at various asset prices, it starts to get a bit skinny. So the benefit here is we've got the acquisition price of $2.5 million. There are some bits and pieces that are missing. There are some bits and pieces that need to be upgraded. So it's not quite as cheap as, we're getting it for a 95% discount. It's not quite that good, but it is a very good price.
And how do your shareholders, the larger shareholders, kind of view that, and your partners view this? Because obviously it's risk mitigation, as you say, in terms of that volatility, but it's also kind of front loading the kind of capex at a period where you're kind of pre-revenue. Given the amount, does anyone care?
Well, I mean, we're not going to start building the acid plant straight away, and I would suggest it probably comes in the second or third year of production. The first 5 years of our mine plan is exceptional, and so the volatility of the acid price during that period is less of a concern. It's as we get more mature that it becomes more important to our business plan protection. Obviously, if the money's available, we'd love to do it. It doesn't make any difference at all to our overall NPV. In fact, it improves the project economics to do it. It's just whether or not the capital is available. Overall, the partners recognise and agree with our assessment that one of the biggest risks to our business plan and to executing that business plan well is our exposure to the volatile asset price environment.
Right. Okay. So this is a kind of hasn't been operated since 2015. Is it? So one of these sort of dusty barn finds. Still in relatively good condition.
It's in relatively good condition. There are some bits and pieces that are missing. So, that's where we're doing the full review of that engineering report and then going back and doing a more detailed due diligence process to make sure that what the engineering report says matches with what we see.
Right. Okay. And just coming back to the fees, obviously financing work streams underway with debt advisors, etc. How engaged are your strategic partners, Mitsubishi, Assur, in that whole process? What do they do for you?
So they've been very engaged in the TEC process, but they're actually not that involved in the debt financing process until we actually start having proposals, because obviously it's important that our big shareholders that are inside the tent are aligned with us in terms of our financing strategy. But also it's important that all of our shareholders are aligned with our financing strategy. So Assur has a position on the board. Mitsubishi's not on the board, so we probably they won't get as much information from that process as we can. But our intention would be to release hopefully a credit approved financing package to the market towards the end of the year, so that the equity investors and both new and old can see what the debt equity split is going to look like, how much equity gap there's going to be, how much free cash flow there's going to be left over for the equity holders, which is what we all care about.
Okay, and you've kind of explained the kind of de-risking process in terms of moving towards that FID and feed. I guess the one question we get in a lot is around kind of M&A in the copper space more broadly. Not a lot of players, not a lot of advanced players. And it's very different from the gold space. I think the gold producer is producing a ton of cash, margins are good, M&A abound. Copper, how does this play out? Are people trying to sort of capture and guarantee copper reserves, as it were, in the gold context? Or would they be kind of, I guess, prepaying for copper supply in that sense as well? So how does the copper M&A environment work? What are people buying into? What do they need from you?
I guess it depends on the scale of the asset that we're talking about and the risk associated with it. But what we know is there are very few actionable copper projects in the near term that can become a reasonably significant producer of copper. Now, we're at the smaller end of what's globally significant. I've said that regularly, 50,000 tonnes. But we have a growth pipeline that we think takes us to 70, which is meaningful. For everyone bar the majors, it's a meaningful amount of supply. So we would expect there will be a lot of interest if Greenstone elects to put up their block for sale. I think the evidence of that is, MAC being acquired by Harmony Gold in Australia. They obviously, it's a 50,000 tonne project, paid north of $1 billion for it. There was a bidding war for New World Resources between Kinterra and Camel. Obviously slightly smaller, zinc heavy VMS system in the US, but a bidding war nonetheless. And, they ended up paying what we think is a decent baseline price for something that is, significantly smaller than Marimaca. And then obviously there's the bigger transactions like Mitsubishi Corp's announced transaction into Copperworld, which is owned by Hudbay. And if you back calculate that, they're either underwriting a nearly $5 a pound copper price, or they're paying a significant multiple of NAV. My money is on them paying, underwriting a higher copper price because they're very much in the flow of that information. I think that reflects just how, that's a good long-lived asset in a good jurisdiction with none of the permitting issues that you see for some projects on public land in the US, but it's not without its challenges. And it's a significant amount of capex, and that transaction I think is pretty instructive as to what is happening in the copper space. So if we were to be put up for sale by Greenstone, or if Greenstone was to put up their block, I'm sure there would be a lot of interest.
Okay, and obviously you're moving forward on the DFS, and that's kind of showing this kind of route to market, advanced copper play. But there's also what you've made a few moves this year, which kind of demonstrate the potential for scale. Can you maybe talk to some of the kind of growth pipeline and what you're kind of going to be focused on concurrently?
Yeah, what we're talking about is a multi-pronged strategy. So we're very focused still on the mod being pushed forward. So permitting by the end of the year, debt finance by the end of the year. We think we should be constructing in 2026. And so we're setting ourselves the ambitious target to be ready to go in Q3. Maybe not achievable, but I'd hope we can start construction during the course of 2026. So that's the first focus. The second focus is how do we go from 50,000 tonnes to 70 or more thousand tonnes of copper for an extended period of time. And that's really the focus is Pampa Medina and Madrugador oxide deposits. So we are pretty well progressed in a PEA for Pampa Medina. Just thinking about how we release that. Do we release it as an integration study to Marimaca, or do we release it as a standalone with the implication that the integration is likely to have synergistic benefits that reduce the capex and potentially increase the NPV? So we're just thinking about the finalisation of that study, which will be a couple of months, I would imagine. And that then really paints the picture of us being 50 going to 70,000 tonnes plus for more than a decade. And then the final piece of the puzzle is this amazing exploration story we're now uncovering at Pampa Medina, where we don't know how big it could be. It looks like it could be a fairly large system. Sergio, who when he says things to me, I tend to listen to him because he's been pretty successful. When he told me it's a tier one opportunity, and if it's a tier one opportunity, I think we need to be spending money to try and work out how big an opportunity that is. There's two components to that exploration strategy. There's one is growth of the oxide deposit. So that is actually incremental complementary value to the base mod case. And then there's this sulfide potential at depth, which which is the really big opportunity, which we would like to try to define over the coming 12 months, I guess, of drilling.
I think it's quite interesting in terms of this dual prong approach to the business and business plan. Getting to production at MID maybe buys you time to actually get after Pampa Medina properly, systematically, and prove up this scale. So both, I guess, underground operation at Pampa Medina seems eminently possible. But how far are you going to go in terms of demonstrating the size of this system, and ultimately, and how do you go about demonstrating that scale?
We're putting together an exploration program now, which is the next phase. So Sergio's in the middle of a 10,000 meter discovery program, which is just about showing that this theory that he had, that it was an extensive sediment-hosted copper deposit, completely unique in Chile, was valid, and he's proven that, which is great. Very happy for him. We're now planning the next phase of exploration, which will be first about infilling at Pampa Medina in the defined area that we have now, which is big. Like, it's 1.2 kilometers east-west, 1.2 kilometers north-south. The average true thickness of the sedimentary horizon, which we think is prospective, is 50 to 100 meters. I mean, it is already a very large system. So we will go back and do infill drilling on 100-meter spacings. Maybe it's enough to get an inferred resource, but it's certainly enough for us to get a good or a very robust exploration target out to the market to say, this is why we're spending money on it. And then in a parallel with that, we'll continue to step out. We'll just continue to step out until we find the limits of the system. At some point, we'll drill and we'll say, okay, it's not exciting that direction anymore. In fact, we've already identified on the eastern edge, we think it's less prospective. On the southern edge, we think it's less prospective. We still think there's plenty of prospectivity to the north and to the west. So we just keep stepping out and infill drill in parallel. But we see value for our shareholders in moving it forward at a not too quickly, but at a decent speed. Once we're in production, reinvesting some of that cash flow that we make there in exploration will generate value for our shareholders. And so that's the intention, is to continue to move these forward. But naturally, the biggest bang for our short-term buck, for our shareholders' value and shareholder return, is going to be in the development of the mod.
So far, you've demonstrated this kind of, I guess, high grade potential. This high grade sediment-hosted manto potential there. So there's oxides and there's sulfides. Same with Madrugador, isn't it? It's another oxide opportunity for you.
Madrugador is an oxide opportunity, but similar to Pampa Medina, it was drilled by the groups that were looking for traditional Mantos Blancos style mantos, which were hosted in the upper volcanics. And so they never really drilled into the lower sediment horizons or the meta sediments below that. So we see the deeper opportunities across all of our land package. Obviously, we like it to be as shallow as possible. And then also there are other deposits in the area that are logically complementary to us and probably make the most sense in our portfolio, that we'll look to try to pick up in the fullness of time to continue to grow that sort of district scale story.
Right, but right now focus on the DFS. I think that's what people are excited about, and obviously exploration. It's icing on the cake for you guys. What are we looking forward to over the next 12 months?
So on the project side, permits by the end of the year. That's what I guess the confidence is growing, but you never know what happens. But our current timelines are end of the year we'll have our RCA. That then allows us to start some early site works. There's several permits to get before we can commence construction, but it poises us to commence construction fully in 2026. Debt financing, our objective is to have it announced by the end of the year. And then obviously a lot of drill campaigns and things. We'll have drill results coming out between now and the end of the year. Really the objective is, and I'm going to say it's an ambitious target, is to be ready to commence construction in Q3, the September quarter of 2026.
Okay. Well, Hayden, I appreciate the update. Congrats on the DFS. We'll see you soon.
Thanks.